Good evening, everybody. Hope everybody's having a nice summer evening. I had the great pleasure of going over to Home Depot. I have people do our yards. A guy that lives next door who family owned the property before they sold it off does my yard. He has a nice big riding mower, and I guess there's about 5 acres of stuff. But there's little places that he can't get because his tractor's too big. So I went and bought a used or refurbished Toro guaranteed to start lawnmower. Brought it home, put it on the driveway, pulled the cord, it started right up. I was happier than a pig in doo-doo. Mowed one section where the weeds had gotten too high down by the driveway. Then turned it off, took a swing blade and cut down some more. And then tried to start that mower again, and I pulled, and I pulled, and I pulled, and it didn't start. Just a fine howdy do. But that's summertime. That's right. That's a Big Al quote. All right. All right. As we can see, there's a little different dynamic now in this market. Although the market, as in the Dow, is still relatively sideways, except and still doing these oscillations, there's a difference between this uptrend and recent uptrends. For example, this has been an up day, an up day, an up day. I mean, just positive days, one right after another, compared to before it was up, down, up, down. So, oops, I hope I got, yeah, somebody might have to tell Gary he might have to reboot. That's right. So the difference now is this uptrend doesn't have this waffling anymore. There's much more strength, and a lot of stocks aren't moving with the averages. Morse, that's exactly why you want to use candlesticks, because every up market's not going to have all stocks going up. Every down market's not going to have stocks going down. The advantage we have, knowing what the signals and patterns are telling us, is one, which sectors are showing strength across the board, and then you can even refine it to which stocks in that sector are acting the best or have the best patterns. So that's kind of what we're going to go through tonight. I've had some people say I go through the charts too fast. Could we go through a little bit more analysis of why recommendations were made and when to get out of those recommendations and when to stay in them? So what I'm going to do is let's go through the indexes real quick. Then we'll go through some of the commodities real quick. Then we'll come back to the ones that we've been recommending and explaining why, or analyzing the chart to say why were we getting those versus anything else. So right now with the, if we could draw a line, which we can, right down through the tops, it basically tells us we're in the breakout area now of the Dow. And the NASDAQ, as we can see, if we did that same thing they've gone through that level. Not only did they go through it, they gapped through it. So it's a pretty good indication that things should go higher. We kind of go up through these tops. Means we might have a few more days to the upside. We've had this doji. So this is why knowing what the signals are demonstrating, you get a little bit more of an insight of what you should be doing. For example, we're up here in the overbought condition with the NASDAQ gapping up through the resistance level. We've got potential of going up here, but we also have the same potential that with a doji in the overbought condition, we know what should happen after that doji. it needs to open positive and trade positive. If it opens lower and starts trading back down through the low of the doji, that means there's a good possibility they're in profit-taking mode, because if we see a doji at the top, it's going to move in the direction of how they open it after a doji. So we want to see more positive, or getting up in the morning and see the pre-market futures are still trading positive. The S&P 500 also getting a little bit indecisive, but nothing yet to tell us there's been any definite selling. And where did this all occur? Just slightly above that resistance level. And how did we get there? Notice our flutter kicker off the 200 through the 50, telling us there's a lot of force coming into this. Remember, your flutter kicker is, you can basically take out this little doji, which is a day of indecision, but it also gave us a message. It already told us that when they closed here, the next day they opened it at or above the previous day's open. There's already some strength coming into this with a potential reversal. And then what do we know about the doji? The price usually moves in the direction of how they open after a doji. So that was pretty much a good indication that there was a kicker signal or a flutter kicker signal in progress. So knowing that allowed us to start going after different charts. So I'm going to try to go through a few here. Not a few, a lot. And why were we buying? Because we can recognize the different pattern setups. Kind of a fry pan bottom. Also our T-line crunch. Where did this start getting to be where it was profit-taking time? Notice where we were on this big blowout day. Where do most people buy? They buy exuberantly at the top. Part of this is probably short covering. The short's getting really creamed. So once it gets up here, that's when you start taking your profits, especially if you bought it out of this slow curve fry pan bottom breakout. And just to kind of regress here, this is where you kind of move to your 10-minute chart. Oh, I don't know which day it was. Well, I can't find it. But on that day, with it moving that far away in the overbought condition from the T-line, that's when you flip your 10-minute chart. When it starts coming back down through the 10-minute T-line, you take profits. Why? Even though you haven't had a daily sell signal? Because the daily signal is basically telling you you're way too far away from the T-line. There's probably going to be some profit taking. Now we'll notice what happens. Lots of indecisive trading in here. Then it starts curling back up, which puts us in a situation where if we know what the classic pattern looks like, which is your fry pan bottom, strong price move, pull back, and your J-hook pattern needs a strong price move, which was created by that fry pan bottom breakout, we're more than likely back into a very strong price move, again, with this price move and this price move being the same. So this is where I'm trying to allude to that you don't need to watch each individual signal and get scared on each signal. You still have to take a look at what the pattern is doing to kind of give you another perspective of where things might be going. ANTH is another one. There's your fry pan bottom. There's your J-hook pattern. Notice what it was doing right here near the T-line. They wouldn't let it get too far away from the T-line. That would have been a scary day, which I don't know whether you'd even be back in it at that point. But there's your bullish engulfing signal, and you can start seeing what the trajectory is. And why would you anticipate a possible J-hook pattern? Because notice where it came from, this fry pan bottom strong breakout. What's this telling us it could possibly do? If this moved from 7 3/4 to 9 3/4, this should be taking you up into the, I would imagine that type of move, taking up another 1.5 or so. So the reason we were buying this one in the first place is if you move the chart right here, notice what you had setting up. Pretty much a kind of a wedge formation. And then when it broke out through the top of this wedge formation, that told us that indecisive sideways trading was over. Get ready for the next strong price move. And how did this breakout occur? There's our little Morningstar signal. We could see the wedge coming together. If we weren't buying on this day, we could definitely be buying on this day, because that was telling us after this Morningstar type signal that they weren't resisting anymore at the resistance level. Let's see. That's right. I have an antique lawnmower. No. All right. So should we have taken profits in the SPY today? Oh, let's go way back. I don't think so. No, not yet. We don't have a sell signal. We've got a potential sell signal. It still will be a function of where does it open tomorrow. If it opens positive, what do we have? And I got that double doji sandwich taking you up into new territory. All right. So there's other. This is why knowing the chart patterns. Somebody was saying all stocks aren't going up in this up market. Well, we have a distinct advantage by knowing what the pattern is telling us. And not only does the pattern tell us which direction are we heading, but it will usually indicate what the magnitude of our move is. So even though a lot of stocks, some stocks are moving up and some stocks are moving down, we can see which sectors and which stocks are getting the main or the strong strength. Strong strength. That's a redundancy. And we can also tell when it's time to buy. There's our little buy signal, and kind of a double flutter kicker breakout. And so what did that tell us? That told us that we're probably now in wave 3 of a J-hook pattern. So this is the type of thing I look for, or everybody should be looking for, is what are we setting up? What should we expect from breaking out from a fry pan bottom? Obviously, our first expectation is this very strong price move. Then if they start pulling it back, taking profits indecisively, what is our next expectation? Well, if they can get it curling back up, that we have a J-hook pattern. So this isn't saying that there is going to be a J-hook pattern. You can at least start watching to see if the J-hook pattern is coming in. So we go to the 10-minute chart only after sell signal on daily, not after the sell signal. After, which one were we looking at? That PG and X. Yeah, we have some simple rules. Right now is you can buy on a buy signal and a close above the T line. You can see what type of pattern you had here. A little slow curve, fry pan bottom, breakout. What do we expect? A strong price move. Well, what are our other expectations? Where do most people buy? They usually buy exuberantly at the top. So what's our basic rule of the T line? The further away you move from the T line, the higher the probability it's going to come back and test it. So here's a case where if we were that far away, and we can see on a relative basis how close it was trading to the T line, but here it was a huge distance away, and where were they buying? They were buying way up here, huge, in the overbought condition. That's when you flip to your 10-minute chart and say, I want to start taking profits. Why do I want to take profits when I see the 10-minute chart coming back below the T line? Because the daily chart says we're way, way too far away from the T line. Probabilities are they're going to start bringing it back. PRTA, Probably, because if we can already assess that this is wave 1, wave 3 is already probably halfway through. So there's going to be other ones out there, and I'll come across those, where that pattern is just starting. So that'd be a much greater probability to find something that looks more like this than something that looks like this, because this is what we're looking for coming out of this. So right now, this would be a hold versus a buy. Yeah, we do options, PDO, and we also have the options room where people discuss option trades much more in depth. Yes, we can go through. We're supposed to be doing another session. I'll do one. No, it won't be for. And also our private training session up at CUCA. People are requesting that we go a little bit more heavy in the options, which we can. Monitoring PRTA, where would you have put your stop today, realizing it looks like more upside? Right now, if I'm in the overbought condition, even though I'm in an uptrend, which my expectations are the uptrend should be of this magnitude, today when it opened and started trading higher, I would have put my stop back here right at apparently 60 is where it opened. It's a bit bigger. Because what do we know if it was trading up here and then all of a sudden it was trading back down through the open? What were we going to be creating? Either a doji or a shooting star or a dark cloud or a bearish engulfing. If we're in an uptrend in the overbought condition, to see it move up and then come back down through that level pretty much tells us what we should know graphically. And that is, it's creating a sell signal. You did it right. All right. Okay. So some of the other ones, because of the nature of the pattern, there's wave 1. There's that slow curve, a breakout of this downtrending channel in AMBA. What should we expect here? Wave 1, wave 2, wave 3 is in progress. So for those that are trading stocks, you can buy it. For those trading options, what candlesticks do for us immensely is create the right timing. We're not sitting in something hoping that it's going to reverse. We're buying when it does reverse based upon what the signals are telling us. So we're getting in right at the right time or at the time that it's most expedient for those options to start moving. I would rather be buying something that's on its way up than buying something where I'm hoping that it's on its way up. Because there's no telling how long before this started turning up. But over here, it told us a whole different story. They are starting to turn it up. So AMBA obviously was a result of GPRO, and GPRO was telling us kind of the same thing. Let's make this smaller. There's our wave 1, kind of a J-hook pattern, and if we're watching the candlestick signals in the T-line, the big boys are watching the major moving averages. Failed at the 200, came back up, gapped up through the 50, and then notice what they've done over the last few days. Used the 50 as support, and then gapped up through the 200, which had been acting as resistance. So what's the human nature reaction or pattern? Wave 1, wave 2. Wave 3 gets started. This started from around 37.50 and went to 60. That's 23 points. 23 points from this area would take you up into the almost the $80 area. Earnings tomorrow? Okay. Okay, good, Ed. So back to somebody's statement that says there's a lot of stocks that aren't moving up. We're not concerned about that. We're looking for the ones that are moving up, and we can see graphically which ones those are. Now, Apple, this is where knowing what the signals are telling you, where do most people sell? They panic sell at the bottom. When do you grab for that fallen knife? There's no way to tell. But using candlestick signals, we know what a bullish harami tells us. Pretty much tells us the selling has stopped. We know what the bullish harami followed by a gap up tells us. It tells us not only has the selling stopped, but now they're jumping back in with great enthusiasm in the oversold area. That's when we want to start getting back in. So aggressively, you'd start buying here. More sure, you'd be buying when they gapped it up through the 50, which broke this downtrending channel and also broke the 50. Oh, if I was buying G-Pro, I would still be buying, but yes, I'd be a little bit more nimble. But this one now needs to continue the breakout. It's sitting right at the same level it topped out before, up at the top of that shadow. If it opened lower and traded lower, I wouldn't get in it. If it opens positive, what's that telling me? At this level, it's not acting as a resistance anymore, but now I'm still in wave 3, which gives me a lot more upside. Okay, Sean. Let's see, do I have ANTH? Oh, we already did it. Oh, let's see. If it opens lower next day, at what level? I still wait for the sell signal. Now, where's the one spot that if the bulls are in control that it should not trade at all? It shouldn't trade at all back below today's open, which would also put you below today's open and the T-line, and it would put you back into this trading channel. That would tell you they aren't taking it up. If it did a bearish harami, I probably wouldn't want to see it close more than halfway down this candle, because if it did, where are you? You're back into the trading range. But the probabilities say this one should be heading higher. Wave 1 coming out of that fry pan bottom, going into wave 3. So that's the probabilities. I'm inclined to think that we're heading higher on this one. But if the signals tell me something different, you got to close it out. Now, that doesn't mean you're out of the trade forever. Might be the next day they take it right back up again. Sometimes I close out down here and buy back here, because I'm not worried about this as my profit. I'm more concerned of getting this as my profit. And if this was my profit and I only got 80% of that, but every time I was in it, I was still in the right direction at the right time, that's fine with me, because if you keep compounding the higher probability trades, even though it's not the maximum profitability of a trend, your compounding effect is going to be huge, because you're going to be hitting more profitable trades. How far would one risk the price going above the T-line on a long position? How far would one risk the price going above the T-line as long as right now you'd be trading based on, if you're going into earnings, a lot of people say, would you buy into earnings? I buy what the pattern is telling me. Because if somebody was not confident that the earnings were going to be good, and I say somebody, more than likely we're looking at the institutions that have got much bigger research departments than we do, and they're buying going into earnings. That means they're expecting something to confirm that pattern, like we saw in Google. There's our little scoop pattern. There's our kind of our wedge breakout. And that's what they were doing going into the evening of earnings. They were still buying. I met somebody that knew a lot more than we did, was buying going right into earnings, and that's the result. Now, does that work every time? Definitely not. But I keep telling people, for every time I get into a situation where the probabilities tell me I'm going in this direction, every time it goes against me, I've probably got 4 or 5 that go with me. So I always go with the probabilities with the chart. Okay, they were buying IBM and it's down after. Okay. Yeah, but notice the only thing you have to offset that is notice what this type of signal was today. Let's make this big. First of all, notice where you were kind of showing indecisive trading with a doji. Right here at this resistance level. Was this a very strong signal today, or was this kind of a little bit indecisive? Yeah, I would classify that as not strong buying, indecisive buying. So if they're down, where are they trading right now? I guess I could figure that out. $164. All right. So if they're at 164, ooh, all the way back down here to the 200. All right. Now the other thing that you want to be aware of, or should, I'm going to try to do this, JIBM. Is you wait to see where it is. And obviously, there's not too much you can do after hours, but you wait to see what they're doing 3 minutes before the open, because that's telling you what the big boys are doing. The big boys aren't buying or selling this stock after hours because there's probably not enough volume there. Let's see. So you still always wait to see what happens once they open up the stock or get very close to opening it. Okay, let me, where were we? Oh, so these type of charts where we know what the expected results are. We were saying, should we be buying PRTA? No, I'd rather be buying SRPT, because notice where it is. It's just now at the breakout level. Where's our upside potential? My first target would be here. So that's going from here maybe up to the close to the $40 range. Now that risk reward is much better than something, it's already in the process of moving. So this is where we were buying this one with the expectation that we were in wave 3. eBay, I don't know whether I've got the chart to... Nah, I can't tell yet. I can't tell what the spinoff would have resulted in. So until they get the charts updated, right now they aren't selling eBay, but I don't know what it looks like as far as the chart is concerned. This quiet one has been working nicely. Notice it could never get above or below the T line, and then it popped. So at that point, it was popping up into this area in the overbought condition. So what's our criteria? Start watching for a sell signal. But so far, we haven't had a confirmed, so the uptrend remains in progress. John, I'll get to all the individual ones here. Right now we're going through the ones that we are involved with and why. So this one has basically your strong, or your obvious, which is there's your Morningstar signal. There's your breakout of this downtrending channel. Where's your next likely target? The 50-day moving average. Where do you start taking profits? When you start seeing that it's not going through the 50. When do you buy? When you see that there's been a buy signal, series of dojis now, followed by a move above the T-line. What's that tell us? That told us after all this indecision right here on the obvious resistance level, they told you what they thought about the resistance level at this point. Told you there was now a new dynamic in this stock. This one, when it popped up here, our strategy was start watching to take profits. But so far, there hasn't been anything to tell us that we need to go ahead and take profits. That's right. Yeah, and yeah, remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Oh, this is a bad chart. This is Kroger, and I don't know why they've got that, but let's make this bigger. Take that one out of here. I think that. But the other day, the PCB group bought the spread. Forget where they bought it, 240, and it moved to where it went to 430, and they started taking profits. So the question is, why were they taking profits if there was still potentially more upside? Well, you got to take a look at what is your upside potential. You've already went from 240 to 420, a good percent return, or 430, and so from 430, what's your maximum profit? $5. So the risk reward was not worth holding $4.30 worth of equity to make 70 cents over the next, whether they came out of the Julys or the August. I think it was August. It didn't make sense to hold something that was at 430 to make another 70 cents over the next month of trading, because in that time you've got a lot of volatility. So at 430, to give up 70% potential for the next 30 or 40 days or what time frame ever it was more logical to go ahead and take the profits and take that money and go on to something that was, that I think that T-line is affected by whatever this thing was. The T-line was all just kind of steadily moving up. So anyways, there is a reason for coming out of trades even though it hasn't maximized its move on a spread. And here is SRNE. Notice what it's done after that little kind of slow curve. Not only, so it finally broke out through this level, which, again, this is my favorite pattern, is this slow curve, because when they break out big time. Amazon was the same type of situation. Notice what type of pattern we had here. Here's kind of your big wedge formation. And what happened? They gapped it up through the resistance level. So what's that tell us about the investor sentiment? That they couldn't get back below the 50, and now they're taking it back up. Where's the next likely target? Possibly up into this area. Can it get up there all at once? Probably not. But at least we know what to start watching for. That maybe if there's some profit taking, we have a J-hook pattern that wave 3 takes us up there. So at least we're prepared now, knowing what to do with this trade. Now what we did was we recommended that the calls that were bought down in here, 245, started rolling them out at like 1450, rolling them out of the Julys and moving over into the August, but buying a higher strike price in August, because if it continued higher, your percentage return was still going to be pretty good. And, oh yeah, I think Kroger did split. Maybe that was what that was. So you've got big profits, you put those in your pocket, and you put some more money back into a higher strike price, that if it continues, you're still going to make good money. If it fizzles, you've kept most of the profits in your pocket. Yeah, TC 2000 doesn't show that candle. So again, each charting service gets a feed from somewhere, and sometimes there's a corrupt trade in there. That's right. So we also have things like HRTX. There's your best friend, your Doji Gap Up. There's your best friend, your Doji Gap Up. And what's it telling us? That we're probably in another strong wave, which is now creating our J-hook pattern, which means we went from 12 to 32 basically, 20 bucks. 20 bucks from here takes us up into the $50 area. Can you recommend earnings play on Amazon? I thought Amazon already... I don't know whether they reported yet or not. No, I can't recommend it a play. All I can recommend is what is the chart telling you? Still telling you they're buying pretty hefty going into into Thursday. They're still buying. At this point, we're being a little bit more nimble. And if we start seeing some profit taking, where do you think they're going to take it to? Probably back to the T-line. So we'll come out and then wait to see what it does if it comes back there. Otherwise, if there's no profit taking, you just continue to hold this stock. KEYW we recommended because there's wave one. Notice what it did back here. 3, 4 big dojis, left-right combo, and then bounce back up off the T-line. We're still strong, or still want to stay long on this one. And if it opens positive tomorrow, what do we have? We've got a doji sandwich, which further confirms the J-hook patterns in progress. Are you still looking at? Yeah, I use the 3-day moving average. That might not be on this chart. I've got different charts. But you use the 3-day moving average. For example, this may have been way above the 3-day, and so so the 3-day moving average, the 3T line, you use when you start getting too far away from the T line. And you can also use it for confirming that there's been a reversal, that if the 3T line comes up through the T line on a buy signal, that's another little piece of information telling you that the strength is starting to pick up. SPWH, this was another fry pan bottom, little scoop type pattern. So percentage-wise, it's had a decent move, and all we can do with this one is stay long. But again, this is identifying which patterns. There's your slow curve breakout. There's your little scoop type pattern, and what started the scoop type pattern confirming? Big left-right bullish engulfing. I'm telling you there was more upside. So the reason I'm trying to go into these a little bit more detail is the analytical factor is these charts are all telling you something. Remember, the bigger the signal, there's our best friend. The bigger the signal, the more compelling there's been a change of investor sentiment. When was the time to take profits? When you started seeing some selling. This is kind of a hanging man. Where were they going to bring them back to? To the T-line. Were they going to stop there or take it to 50? Had no idea. So might as well start taking your profits. You can always buy it back when we know it's moving in this direction. How far up do we think this is going to go? By the same magnitude as this. And how did it start? With kind of a double flutter kicker signal. Earnings on the 8th or on August 3rd, all right. A scoop pattern usually has a very flat handle and then the scoop. A J-hook pattern has a prerequisite of a very strong price move, then the profit taking, and then the J-hook in progress. So a scoop pattern is going to be flat. Let's see. And because we know what our signals tell us, now this one is more pronounced over on TCNet. Notice how flat you are. Then you had kind of this is more of a Morningstar signal on TCNet. That started your slingshot effect to the upside. And now you're in the J-hook. So scoop pattern, J-hook pattern. And there was another one. Oh, Pshaw. Oh, there's another scoop pattern. I'll find it. We do ANIP. ANIP. Oh, that's the one we were doing. J-hook pattern. Notice the trajectory. Pretty much probably in the same trajectory. Oh, was this? Yeah, there's kind of a scoop pattern right there. Oh, there's a little mini scoop pattern right there. And you can really recognize a scoop pattern based upon how flat the trading has been. And then all of a sudden, it pops down and pops right back up again. That usually tells you there's going to be a slingshot effect. Oh, I forgot the commodities, didn't I? Sure did. All right, hold on. We'll take a break here and go back to the commodities. Crude oil, as you can see, had this dumpling hop, and where did it fail? At the support. Again, there was a wedge formation you could see setting up. You could see what the support level was the 50-day moving average. So when it broke down, especially coming down through this resistance level, but it broke down right in here, especially right here where you had the doji gap down. They tried to bring it back up above the T-line. So this makes a very easy entry strategies. Where was a logical place to short if you wanted to go short here, if you didn't short it here? You just put your sell stop right here, because if they couldn't get this up through the T-line, they were able to bring it back down through here, that means they were still selling it off. Here's another logical place. Even though you're in the oversold area, what's this kind of telling us? A bearish engulfing signal right at the T-line after a big down move. What type of pattern? Now we got the bearish J-hook pattern in progress. Let's see, DAYX. This is the dollar. Dollar's still on a nice steady uptrend as long as it stays above the T-line, which means the euro is in a nice steady downtrend as long as it stays below the T-line. So now you get a little bit more wary, because you are in the oversold area, so you have to watch a little bit more diligently to make sure they don't pop this back up. Gold. Whoops. On that one. Can't ever figure out which. There's gold. The Qs. That's the, must be August. But now they've gapped it down in the oversold area. So where do people usually sell? They panic sell at the bottom. So if you're short gold, at this point I'd probably use today's high as my stop. If they were able to bring it back up that far away from the T-line after gapping it down, more than likely there's going to be at least a bounce back up to the T-line. Silver. Same scenario. You're kind of silver, you're still in a steady downtrend. You just stay short on this one. The 10-year notes looks relatively flat. And I would suspect that the 30-year bonds is relatively flat. Looks like it's trying to move back up the bonds, which means yields are still trying to go down a little bit, but not anything yet that would be great excitement. Gold, silver, crude oil. Right now we're short coffee. As you can see, coffee's in this downtrend. It's trading back below the T-line. Where's the next logical target? Right down here. Let's make this big enough so you can see it. So here's the next support level. If it opens lower over the next few days, you can see how it's been waffling on the way down. If it opens lower, this is more than likely where the next target's going to be. And soybeans, probably in a wedge. Whoops. So wheat has been selling off, but notice where it is right now, right smack dab on the 50-day moving average. So this is, once again, if you're in the overbought condition and you see a big sell signal, like a big bearish harami, more than likely they're going to bring it back at least to the T-line. Is there a fund one can trade coffee? Oh, yes. Is it Joe? I guess you can trade the coffee index. Yes. There you go. Oh, you guys got it. All right. What are your 5 favorite patterns? Oh, I've got that quantified video showing the 18 best. I would say number 1 would be the best friend, doji in the oversold area, followed by a gap up. Right behind that would be your left-right combo, doji followed by a bullish engulfing. I would say probably number 1 prior to those is the slow curve breakout, which is kind of a derivative of the fry pan bottom breakout, and then the J-hook pattern. So if you just traded those 5, you'd make tons of money, both on the long side and the short side. Whoops. Trying to think if there's any other commodities that is, I don't know what cocoa is doing. Cocoa's staying in this uptrend. I trade cotton quite a bit. CTEZ. December cotton. Cotton right now is not real tradable because it's in this trend channel and it's still heading down, so I wouldn't be shorting it, but I wouldn't be going long until I see a buy signal and it trying to come back up to the top of the trend channel. Crude we did. Right now we're short crude oil. Because it had this wedge formation, broke through this level, and had the bearish engulfing. If this is wave 1, wave 3 should bring us down into here someplace, which I'd guess is somewhere around the $42 area. The T-line is the 8 exponential moving average. The other moving averages, like the blue line, which is the 50, the red line is the 200, and the gray line is the 20. Those are simple moving averages. The T-line is the exponential. And the reason we have those other 3 on here is because every major money manager around the world uses those to make their decisions. Bearish engulfing. A bearish engulfing is when this big dark candle completely engulfs the body of this candle, completely engulfs this body of this candle. Not necessarily the shadows, just the body. So what was this telling us? They took it down. They were trying to bring it back up above the T-line, did another bearish engulfing. So now we can assume we've got wave 1, wave 2, going into wave 3. Okay, I can't think of any other gold, silver, dollar, euro. only other one I've been playing recently is the Lean Hogs, and it's not in any trading range right now that I'd want to be risk in. And live cattle also is still below the T-line, but we're now in the oversold area, and it's trying to show support in here, so don't do anything with this. Oh, rice, I don't even know how to do rice. There's rough rice. Yeah, I don't know if rice has enough contracts to even bother with. But that's why we use candlesticks, is because the Japanese rice traders made fortunes trading the most basic of all commodities, which was rice. All right, so Rely is another one that if you make this chart smaller, oops, can't make it too much smaller, but it's in a nice J-hook pattern. There's our little inverted hammer signal, gap up, wave 1, wave 2, going into wave 3. You can stay long on this. If you're looking to buy this, I'd probably use this level. I'd rather pay $13.05, knowing that it's still confirming our pattern, or even more conservative, whatever this level is, looks like around the $13.65 level. If it breaks out through there, it tells us wave 3 is in progress. And why is this pattern good? Because there was strong buying going on in here. Then there was profit taking. The profit taking's over. Usually the strong buying from this level continues again to continue that trend. I think we did Google. Google, now you can stay long. It broke through this level. They were buying into the earnings. I would suspect now that there's been a change of investor sentiment out of this area. It's probably in a 45 degree. ZSPH is another one that we're buying because same scenario. And notice where this J-hook pattern started. Right smack dab off the 50-day moving average. And what did it do? They gapped it up through this resistance level in the T-line. There's our little J-hook. All you can do with this one is just stay long as it doesn't close below the T-line. So again, this is what is kind of the confirming indicator. This downtrending channel, and we see buy signals that pop back up through that level. That's telling you this downtrending channel isn't there anymore. There's usually going into the next wave. Now, those are the ones that you want to buy. There's others that you get rid of. This one had a nice pattern, J-hook pattern, stayed up above the T-line until Friday. It closed below the T-line. If you held on to it for one more day, what did we need to see to tell us the trajectory was still doing a J-hook? You better see it open positive and trade back up above the T-line. In this case, notice what it did today. It actually used the T-line as resistance. You should be out of this one because what's it telling us now? That wave 3 is not in progress. More than likely, they're going to come back down. They couldn't get to the 50 here. They're probably coming back down a second time to test the 50. So you shouldn't be in it because they could be testing it and going here. We don't know where it's going. But the probabilities say you're out of it. You can always buy it back if it bounces up, does another buy signal on the 50, and starts positive from there. Oh, buy ZSTH. You could. If I was buying it right now, we've already owned it when it broke through this level and it's staying above the T-line. If I was going to buy this, I'd have my buy stop at today's high or open. If it comes up through there, it's telling me they're going up into new territory. But and there's other ones. Again, not all charts work. So what you have to know is if this chart doesn't work, where is it not working? When they close it back below the T-line. Close it out. Because even at this point, what's it kind of telling you? If they're not going this way, they've got a good prospect of going sideways as a wedge formation. And you don't know which way they're taking it at that point. So close it out and move your money onto something else. Again, every time you see a chart that doesn't look good, close it out because there's a half a dozen or a dozen or 5 dozen that do look good. Same scenario on Eni. Eni had this nice breakout of the T-line crunch through the bobble. But then when it closed back below the T-line on Friday, telling us, all right, they might have been supporting coming back to test the 200. That meant they better open up positive and trade positive. The fact that they closed it below the T-line again today tells you this one's not working. Close it out. You can always buy it back on the next buy signal. And that was the biggest element that probably started making lots of money for me, was getting out of a trade that's not working, but not being afraid to buy it back when it is working again. A lot of times I would get out of a trade and they'd start back up, and I said, they're not going to fool me. I'm not going to get back in there. So as soon as I buy it, they start selling it off again, thinking they were after me personally. And when I discovered that prices move based upon the way human nature usually makes them move, then I could get my emotions out of my own trading. RMTI. This one had a bearish engulfing signal, used the T-line as support. What did it tell us? They needed to open positive and trade positive. The fact that they could come back down. Now, some people say, well, where do you sell when it closes below here, below the T-line, or use the T-line? Well, in this case, when they've already tested the T-line and did a sell signal, and they opened it positive, where should it not trade if it was confirming the sell signal? Probably shouldn't be trading back below the low or the T-line again, because if they did, that's pretty much telling me they aren't buying and taking it back up. You can close it out. What's the worst case scenario? You close it out when it's time to close it out. If they had turned this around and started back up, you could always buy it back, because what type of signal would you be setting up at that point? You'd have a hammer signal that's closing back up above the T-line. Looking at trades that are not working is often so much more informative than the others. Yes, because there's expectations. If I'm buying based on a buy signal, my expectation is we should be moving in this direction. I also have an expectation we shouldn't be trading below the T-line. How long do we hold this? Until we see a sell signal and a close below the T-line? Well, we're up here and we see the sell signal, and they aren't taking it back up. Yes, this is all just let the graphics tell you what's happening in that investor sentiment. And once again, that is where I started making money. Obviously, being the worst investor in the world, I had a lot to work with, that I could start seeing where I would usually not sell, or I'd usually be the buyer up here. Everything looked great. This is wonderful. And as soon as I'd buy it, it would go down, because I was just buying because of the investor sentiment, which is what most people do, versus knowing what investor sentiment does and knowing when to be getting out of a trade instead of getting into a trade. A few of these. Again, not all trades work. So when they aren't working, if we stop this chart right about here, this should open positive and done their little cup and handle. Well, what did it do? It closed back below the T-line, kind of doing an evening star signal. What did that tell us about our trajectory? That we're probably moving sideways. Is there a time to buy this? Yeah, if it came back up through this resistance level after basing in here, that would tell me that they're starting to buy this one again. DYAX, same scenario. It was starting to show some good action to the upside, but now it's back below the T-line. So what can we project about the trajectory of this uptrend? It's going to be relatively slow. And where is it moving right now? Good possibility they could be bringing it back to the 50 again. And then you could buy it back on a quick trade, but at that point, you watch to see what it does once it gets to the top of the trend channel. But at least it's telling us what the power is of this trend. Which right now is very slow sideways, slow upward sideways. SGYP, there's a left-right combo. This one also had the prospect of continuing higher until they closed it with a bearish engulfing back below the T-line. That pretty much told us unless they could open this positive and take it right back up, that our trajectory is starting to dissipate. We definitely don't want to be in this one, because if you look at this chart, you should be able to ask yourself, and this is what I always had to do, if I own this, what is my emotions telling me? That I'm hoping that it's going this way. Then I'd finally have to say, well, you're looking at this chart, and what's this chart telling you? It's not going up. It's going down. Close out the position. And that's how I had to dig through my own emotions to finally say, what's the chart telling me? I close out the position. So I'm looking for things that are telling me that they're in an uptrend. And this is where that's why you don't get concerned so much as a daily chart. I know people are asking, well, what do we do with Montana in a bearish Harami? What you first have to evaluate is, where did the bearish Harami occur? Definitely not in the oversold or overbought area. Stochastic's still heading up. What's the overall trend? Well, we can see obviously we're in an uptrend and they aren't closing below the 50, and we're still above the T-line. So you have to sometimes just tell yourself there are down days in an uptrend. But unless there's something that tells you there's been a drastic change of investor sentiment, just let the uptrend continue. Now, could it come back and close below the T-line? Definitely. But you're buying based on the probabilities that this chart pattern is telling us we're heading up. So I would rather let the chart tell me what to do. And if it closed back below the T-line, the chart's telling me it's not a very strong move. Get out of it and go on to something else. AMED, another left-right combo. Well, what's our overall chart pattern? The classic fry pan bottom. Notice where it broke out, right at the same level the pattern started. Notice where they couldn't close it, below the T-line. Notice where the profit taking started. When you were that far away from the T-line and it opened lower after a little shooting star type signal, where do you think they were bringing it back to? The T-line. If you were out of it up here, you wouldn't have been in it here. Let me make this bigger so I can show you where here is. You wouldn't have been in it here. You wouldn't have been in it here yet because you didn't have bullish confirmation. Wouldn't have been in it here. Wouldn't have been in it here. Now you can start looking at coming into it, because what was the trajectory starting to show you? You're possibly now in a J-hook pattern because they're back up above the T-line. Now we have a left-right combo in the overbought area. What do you want to do with this one? Well, it should open positive and trade positive to stay in it. If it opens lower, it might be coming back to test the T-line. You can always close it out. This is the one thing that's helped me again quite a bit, is the close it out. You can always buy it back. And usually when I do that, it might be the difference of 15 cents, 30 cents, 45 cents. But I wasn't buying it for 15, 30, 45 cents. I was buying it on the basis that if this move right here was 12 bucks, I'm looking for another 12 bucks to the upside. All right, we'll take a look at Tezar real quick. Yes, and so what's Tezar telling you? Tezar telling you pretty much they aren't taking it up anymore. This is what the pattern is. So if it closed here today, I own Tezar, I would be out of it, because there's no trajectory and nothing to tell you the bulls are in control. Might even be the bears are in control, but you can see you're in a wedge. That's just not a good trade or good chart to trade at this point. So if you see your chart has turned into a bad chart to trade, then don't trade it. Move on to something else. Okay, just a couple more as far as the ones that we have been trading. HZNP became an additional, well, for crying out loud, I've been brushing a darn fly off my ankle all evening and just found out it was a thread. That's just makes your grandmother. But this became more intriguing on its uptrend when we had this big belt hold signal and it traded back up. If we weren't buying in here, we started buying in here, almost got out here, but it needed to open positive and trade positive, which it did the next day. Now we've had a gap up. At this point in the overbought condition, we just use today's low as our stop. So there's a few other good charts that should be looked at, such as FGEN. Look where it is on this fry pan bottom, a little kicker type signal. They use the T line as the support level. And where did it close? Right about where it closed at its high. So if this opens positive, what do we got? We've got this potential move over the next few days. Hold on to your individual charts. We'll get to them as soon as I tell Jim to do the double line. Then we'll take those. WWW also has kind of a cup and handle. It's closed right at the high resistance level. We're watching for this one to open positive. Shake Shack. Notice the Morningstar signal that broke this downtrending channel. Today they did a doji. Makes it very simple. If they open up positive, you've got a doji sandwich in progress. And where's your next likely target? Right here. The next thing you do is see what everybody else is watching, so you throw the Fibonacci numbers on here. So the 50 is right about where the 38% retracement is. Then, or the 50-day moving average is the 38% retracement, the 50% retracement, and the 62% retracement back up here. So if this starts trading positive, now we've got a few targets to watch. Not that we're using them to say that's where the price is going to go. We're using them to see what happens at those prices. So it tells us when is the sellers starting to come in. NVIV, another J-hook pattern coming up off the Morningstar signal, double doji sandwich. We're right here at this resistance level. If it opens positive, you can be buying it based upon wave 1, wave 3 in progress. Hasbro, for some reason, is picking up strength. Look for a 45 degree to come off of here. And Dust is the bearish for the golds, but notice what it's done, which means the bearish gold prices may have hit bottom. You've gapped up well into an overbought condition. You're still coming out of a fry pan bottom. You just get a little bit more diligent as far as watching for a sell signal. DJ, is that a message of some sort? Oh, Hasbro had earnings today. All right. And JDST. Oh. There's that fry pan bottom breakout. I'd look for at least a 45. So this becomes, even though it's gapped up and it was up a huge percentage today, like 25% at least, maybe even 33%. People say, I don't know how to buy a stock that's up 33%. You do if it's coming out of this pattern, because there might be another 40, 50, 60%. Yeah, I've fallen asleep at the keyboard myself many times. And XL. This one wouldn't be buying it. This one is telling you the obvious, that this is where you could be buying, so that you are in a situation where you could get a 50% move in one day, being in the right place at the right time. All right, same scenario on the shorts. AEM, there was your failure here at the T-line area. You go short because you have a bearish J-hook pattern, and today they gapped it down. So we're still short this, but right now our stop is at today's open, as if we're in the oversold area. If they have enough strength to bring it up through there, it's time to take profits on the short side. HAR was one that was pointed out, fortunately, in the chat room. Notice it failed at the T-line, a bearish J-hook pattern. You stay short on this one until you see a buy signal. A lot of the oils, SN, for example, you observe the obvious. The obvious is it's in a downtrend, and it's not able to get back up. When it got back up above the T-line on kind of a scoop pattern, it failed, came back below the T-line, telling us wave 1, wave 2, going into wave 3. LB was one that you just want to stay short, because also observe the obvious. Where did this one fail? Right at the 50-day moving average. And what did it do at the support level? Nothing. It's still in a downtrend, and you stay short on this as long as it doesn't close above the T-line. And EMES, another one that we're short. Because what's this tell us? The opposite of a fry pan bottom is your dumpling top. And that tells you the investor sentiment was getting more bearish and slinging it to the downside. So you stay short on this one. Would you still short LB? Probably not. If I was short, which we are, we'll stay short, but I wouldn't necessarily short it in here. Now, if I did short it in here, you just ask, where's the logical target? Oops, that's not what we want. You can kind of draw a trend channel right here, which tells me here's my next target to the downside. So I wouldn't short it in here unless it came right down through this level. Let's make this bigger. But if it came back down through here and it's still heading in this direction, then I could short it with the anticipation they could drop it down into this level. On WLL, you can. I wouldn't short it here because you are in the oversold area. Logically, it should have been shorted up here, but there's some that I have a hard time shorting because I know too much about them. That would that at any point, especially if crude oil starts popping, they could turn these around very quickly. So you'd have to have your stop set in. Where would you place your stop on EAMS? Right now, I'd probably use today's open. But if they could close back up above, or if they could even trade it back up, remember, you are in the oversold area. You're that far away from the T-line that if they have enough energy on the bullish side to bring it up through there, I want to close it out. Whoops, that's just great. I lost the whole... Yes, so, yeah, they failed the T-line. So, this one I'd be more apt to start watching for a buy signal down here. Okay, I guess that's about it, and I went way over time. So are there any general questions on candlesticks? Not the individual ones yet. All right, Jim, go ahead and do the double line. And in 4.6 seconds, do the next double line. All right, I can see some of you jumped the gun up here. It's usually a very severe penalty. Oops. All right. The other double line is in. All right. I got to stop it because I can't, everything just keeps scrolling right past me. All right, we did Google. Google L, you just stay long as it doesn't come back. At this point, I would use yesterday's open as my stop. I wouldn't want to see it come down through that level. Under Armour, you stay long on this one. If you got stopped out the other day, buy back today or buy back on positive trading, because what's it telling you? They're still trading up above the T line. AZN, that's an ADS. It's hard to trade the ADSs because the charts are so choppy, but all you can do on this one logically is that as long as it stays above the T line, you can stay with that one. ETE, right now, I'd be watching to see if it supports here on the 200. If not, you stay short on this one. If I was short right now, again, I'd use today's open as my stop. It shouldn't come back up to that level. Whoops, what did I do here? SWKS. This one is not really that enticing. There's really not been any strong reversal signal here. You're still in the sideways mode. I'd be someplace else. That was just not a great chart because it's sideways. Now TRIP, this one I would be buying. If I was long, I'd stay long because this had the dojis inverted, or the kicker type signals, the gap up, and now you're above this level just barely. If I was buying this one, I'd have my buy stop just above today's open. That would tell me they're still buying. GPRO, this one you could be buying on positive trading, breaking out into new territory after the gap ups into wave 3. VLTC was having a hard time today. You watch what it does at the T line. It has to be above the T line. If I was buying this, I'd put my buy stop at today's open. If it comes back up through there, the profit taking is over. Or it's telling us the profit taking is over. NCR, this one you can stay long. Still use the T line as your stop. And here's a good case of when you see that big shadow to the upside, when you're just starting to trend, if they open up positive, you can be buying. Profit taking of yesterday was over. The buyers are still there. If I was buying this right now, I'd watch this little downward trend channel. I'd rather pay $32.25 for it, knowing that it broke that downtrending channel. UMPQ, I'd stay long. If I was buying this one, I'd rather pay whatever this is up above this level. Tell me they've broken through that resistance level. ADXS, nothing here. I wouldn't be long or short this one. It's just sideways. Disney, I wouldn't trade it because it's too lethargic as far as the percentage move. But if you like Disney, you stay long, just as long as it doesn't close below the T line right now. And Fold did a shooting star after a gap up. Makes this very simple. If it opens lower tomorrow, you close it out immediately because it's probably coming back to the T line. You want to see this open relatively flat at least and start trading higher to stay in it long. CRTO, same scenario. It needs to open positive and trade positive. Otherwise, if it opens lower, especially comes down through today's low, it's probably coming back to test the T line. Ruh-roh. WBA, Walgreens Boots Alliance. All you can do with this one right now is stay long as it stays above the T line. You have this kind of this little trend breakout. FEYE. Whoops, I missed some. Oops, and I missed whatever. What's happening? Oh, I hit the wrong button. You stay short on this one. You can see that it failed the T line in the 50. I would suspect you're in a bearish J-hook pattern, that if this is wave 1, wave 3 could take you all the way down to the 200, which would be equivalent to testing the lows. Citigroup, stay long. Not a very exciting one percentage-wise, but notice where they came from. Kind of that flutter, double flutter kicker signal. You're right back up into the trend channel. And Baidu, I think Baidu you stay short. Whoops, no, that wasn't the right one. Anyways, this one you can stay long. You preferably want to see this open positive. Remember, it's going to move in the direction of how they open after a doji. So if they open it lower, especially coming back through this level, you're in the bobble. So I'd close it out, and then I'd just wait for it to come back up through the 50-day moving average. Guild, you stay long on this one. Just some sideways consolidation. And CHKP, stay short. You see a buy signal. And we did this, WPS, CNC. Nothing great here, percentage-wise or trajectory-wise. What's wrong way? Just waffling sideways. If you like it, you can stay long, but the percentage move isn't going to be all that great for you, number one, and you stay long as it stays above the T-line and the 50. Loco, stay short. Notice the dumpling top. You stay short as long as they can't get it back up above the T-line. Bank of America can stay long on this one. It's now back up into the trajectory, just like Citigroup, back up into the trend trajectory. GMCR. Keurig you can get ready to buy, but you still have this drastic downtrend that it has to counter. So even if you buy it, you still have to make sure it stays above the T-line. Probably right now I wouldn't be long or short Keurig because you got a base setting up, but it's a base in a downtrend. The Qs, whoops. Qs basically have broken out through this, oops, right at that level. So if we wake up tomorrow and see the pre-market futures are down, more than likely they're going to be doing some profit taking back to the T-line. This looks like an SELG that you're in the 45 degree. You just stay long on this one. Starbucks, just stay long. Not a big percentage mover, but a steady eddy right now. Kroger, you can, if you like this one, you can stay long. It's got that big fry pan bottom setup, and you're right here at the breakout level. So I guess they did split this one, didn't they? We did Apple. Apple, you can just stay long because after the bullish Harami gap up, you're right now at the kind of the resistance level. But they gapped up to get there, which usually means they're taking it higher. They can see where the resistance level is, and they gap to get to that level. Usually means there's going to be more upside. Electronic Arts, another one where all you can do at this point is stay long. Decent percentage return, so you just stay long on this one. ABMD. If you like this one, you stay with it. Obviously watch this level to see if they can break through into new territory. But as you can see, it's been sideways for quite a while. I'd rather be buying it once it did break out through into new territory. Lockheed, just stay long on this one. Kind of failed at the 50, went down, and then when they gapped it up through the 50, tells you there was a new dynamic they're getting pretty close to the resistance levels. So with the big move today, I'd still be watching for the profit taking. So watch for any sell signals. And Yahoo, there's your doji gap up, your best friend. It's kind of broken through this downward trend channel. At least watch for it to come back up to the 50. But Yahoo's still not anything in a trend that would get me real enthused. It's just kind of recovering. Stay short on Caterpillar, yes. You can see the big dumpling top, and you can see that they've failed with a doji sandwich back below the T-line. I would be short or stay short, and then definitely watch to see what it does right here. If it gets back below that level, they're taking it down some more with wave 3. Monster at the breakout level, and notice what it's done at the breakout level, your little doji gap up, your best friend. I'd watch to see if they can break this out into new territory. Deutsche Bank, just stay long right now. Again, not very exciting, but as long as the banks are staying positive, that means they're not selling off this market. ADXS, wouldn't be long or short on this one. Fold, we do fold. Fold, yes, did the Shooting Star. We did Disney. QRVO as a short. Yes. Blue ice failure. Probably coming down to at least fill this gap or test the lows. And from what it looks like, they pretty much have kind of a trend channel setting up. So I'd look for it to come back and test this area. PDC, there's your Morningstar signal again. After a little piercing signal, kind of a double bottom. This one you can be buying. You want to definitely see it break through this level. If it does, you're at the 50, and then you've got a gap up here to fill. So more than likely your second target would be the 200-day moving average. And Wayfair, another J-hook pattern in progress. Wouldn't be afraid to be buying this one on positive trading tomorrow. SSYS for a short. Yeah, you could probably go short because observe the obvious. The obvious is this is in a downtrend, and they're still selling it every time it comes up toward a resistance level. You could probably be shorting this one. And you might have a good percentage move in this one. So that one I'm going to put a little star next to. That is SSYS. All right. Let's see. I guess we did all of those. Let's see. Ford we did. Ford needs to get back up above the T-line. Right now it's in that steady downtrend. Okay. Whoops. Where did I get? The dollar, right here at this level. We've already broken through this downtrending channel. Then it came back and used the 50 as support. Right now, all you can do is stay long, as long as it stays above the T-line. Please view dollar again. Do you use UUP or future? I usually trade the dollar outright. This contract right now, which is, I think, September, yes. So if I was going to buy the dollar, I'd be buying the September contract. I don't trade Forex. I think Forex was just a market that they opened up to make it where people that didn't understand how to trade the currencies, made it a little bit more difficult for them. TGH, get ready to go short on this one. Still in a downtrend. Can't get up above the T-line. GNRC. nothing here yet. If you're short, you stay short. But you can see it is starting to base, so you definitely don't want to see this trade at all back up above the T line. Because at this point with the stochastics in the oversold area and you've had this kind of a flat trading, if they took it up above the T line, that told you which way they're starting to take it. And SYNT, you just stay short on this one until you see a buy signal. We did fold. I think we did Under Armour. Under Armour, you can buy back on positive trading. We did those. Halo. Halo, all you can do with this is stay long as it doesn't close below the T line. HIMX. This one, if you're doing anything, you'd be short with the anticipation that it's coming back to the 200, or just watch to see if you've got a little wedge formation. So I wouldn't be long or short this one. And Court, you stay short on this one. Ever since your big move up away from the T line, bearish engulfing signal, nothing to show you that they could get it up above the T line. I would suspect they're heading for the 200-day moving average. And ARWR, another one that I'd be ready to go short on this one, provided the volume's good, on anything weaker tomorrow. Probably not a real big trader, but I definitely wouldn't be long on this one. BV, another one I probably wouldn't be long or short. It's kind of in a sideways mode. Blackstone, BX, is probably in a bobble right now. So you get ready to buy this if it comes back up through the 50. Salt, slow curve, $2 stock. Hopefully the volume's pretty big. But you could be buying this one on positive trading tomorrow. The doji sandwich coming out of this little slow curve makes your next target at least a 50-day moving average. Under Armour, you buy this. You can buy this one as long as it stays above the T line right now. Wouldn't trade it, but it'd be more of a long-term hold. And ZIV, just stay long as this stays above the T line. However, you did a doji up here in the overbought area. If it came back down through yesterday's or Friday's low, probably take profits. I'd be setting up a little evening star signal. And PTX, wouldn't be long or short this one. No direction. TRMW. Oh boy. It would have to open positive and trade positive tomorrow to stay in it, or even to think about buying it. If it opens lower, you should definitely be out of it. 6C, I don't know what that is. PNT, another one that wouldn't be long or short. There's nothing here to show any great direction. Earnings on Thursday for SWKS. It'd have to be something to really break this one out to give it any excitement. Let's see, gold. What's September? Yeah, but that really doesn't mean anything yet. Yeah, that's just possible little short covering. Okay, I guess we'll call it a night. So for those coming to the lake, take this hour and a half and multiply it by 6, and that's what the daily analysis will be of going through the learning process. Doji sandwich, significant? Yes, it's telling you a lot of information. But there's still strong buying going on, and it usually implies there's going to be more upside after that. Point and figure on Apple. All right. Rama, if you need information on the options, again, we don't promote it. It's more for our members. It's an extra service, but it's set up to where you get a lot more information about option trading over there because the conversation is constant option strategies. And you got people like Big Al and Nora and Don M. that all have very good trading backgrounds in the options area, so you can learn different styles of option trading. It's just a separate room. SNSS, you stay long, but this one has to open positive. The Canadian dollar. All right. Let me see if I can figure out how to get the Canadian dollar. This one, all you can do is stay long, but it has to open positive tomorrow to stay in it. USAT, another one you can stay long, but it needs to stay up above the T line. Let's see, the Canadian dollar. Let me see if this is it. Oh, that's cheddar. Canadian dollar, Canadian dollar. I don't trade it. Did that one already. I'll have to find it, Dave. I haven't traded it in so long. I forgot what the symbol was. See, we did NVIV. That one's got a nice J-hook pattern setting up. No problem, Jamie. That's what I'm here for. Yay, the Pirates are winning. Oh, I forgot to even turn them on. So with that, everybody, have a good evening. Remember, we have one spot left in the Keuka Lake. We'd be coming up Sunday, next Sunday, I think. Yes. We'd be doing Monday, Tuesday. Those are usually 8 or 9 hour days. Sometimes we go 11 hours if we come back after dinner and look at more charts. And this is where you're going to get all the nuances of what to do with the candlestick charts. So it does become seared in your mind. And then when you come back to these sessions, they're not kind of learning sessions, but they're more of confirmation sessions of everything that you've already seen and understand. And now it just kind of confirms it in your learning process. So with that, everybody have a good evening. We will see you bright and early in the chat rooms. We'll see you then.